Hello fellow traders, welcome to another tutorial video. Thank you very much for your support. I was requested from a subscriber to do this video, this tutorial, because it's still a new channel, but don't worry, I will analyze all the indicators and you can make a comment if it is a tutorial video, so don't worry about it. Our video will be long, so sit tight and enjoy. We will analyze the Ichimoku indicator, the cloud, developed in the late 1930s, published in 1960s by Koichi Hosomba, known as Ichimoku Sanchin. The translation is "What a man in the mountain sees." Why all this information are useful? Every time that I am mentioning an indicator, you must also consider why it was built and in what period, in what era, let's say, in what time it was created and for what purpose. Most likely, it's a step further to analyzing the Japanese candlesticks. Many people claim it is not an indicator and it's a system of trading. I would agree. It's an indicator that can predict the future. It's a leading indicator. As I have said that many times in my tutorials, the big two categories of the indicators between leading and lagging indicator. Most indicators are lagging indicators. Probably they are measuring momentum. We have analyzed all this information. So this is the most important aspect of this indicator because it can predict the future. Again, don't get excited. It's not so easy. We will see the pros and the cons. Now, let's go to see the formula. Like all the indicators, you don't have to memorize it and analyze it. It will automatically pop in your charts. So you don't have to worry about this. It consists out of 5 major lines. The visual representation looks like a cloud. That's why we call him Ichimoku. But don't worry. You can take a print screen if you want to memorize, not to memorize, to check the formula and store it or make some notes. There is also one myth that it's more useful in the GPY pairs, on the yen pairs. Personally, I disagree. Well, of course, I'm not the right person because I initially disagree with indicators, at least in my trading technique. So we will analyze every and each one of these 5 major line of these indicators, and we will see why this indicator can predict the future. But again, don't get excited. We will open the cable, the GBP USD, to show it better on live markets. Well, actually, they are not live. Today it's Sunday. But visually, this is the indicator. I know it looks a bit fancy. It's not. It's very simple. I will give and explain you each line. The first line, the Tenkan-sen, the red line, it's a very simple moving average. And what I mean by that, we have analyzed the moving average, is the higher high plus the lower low divided by 2, moving average, of the last 9 periods. Now, that's why I told you don't get excited every time you see something new or you are analyzing an indicator. Of course, that's why we are making the tutorials, because we have the experience. If I use on my diagram a moving average with the same period, with a period, let's say, of 9, in the median prices, high, low, close by 2, you'll see that it almost follows our red line. So let's say that it's like a moving average. Now, what is the difference? The difference is that it measures the higher highs, the higher high, and the higher low. Which means it takes in consideration which was the highest price and which was the lowest price. That's why you're going to see that sometimes it's flat. This line shows minor support and resistances. The explanation is very simple. When the prices start trending below Tenkan-sen, the red line, then it's a sell signal. When the lines go above, it's a buy signal. But that's why this indicator is amazing. It's not so simple. You don't have to take in consideration only just one line, the Tenkan Sen. There is also a second line, the blue one, Kijun Sen. This is also the same calculation, the higher high plus the lower low divided by 2, but from the period of 26. You can play and adjust the periods. I don't want to mess you up. Personally, when I use the indicator, I double the values. This is something that came into consideration based on liquidity of the markets back then and today. It's a logical assumption that I did when I'm using this indicator. Most likely I don't use indicators. You can work your way through. This is the tutorial to show you what is going on and how this indicator works. Indeed, it can work very good, but you need to know in what circumstances you're going to use it. Now, the blue line, the second line, is exactly the same. This is actually like a trailing stop line, like a second indicator for the future price movements. For example, you see that the line will crosses, of course, because the one is faster than the other one. So probably at this point you are ready to expect that the prices will go lower. Why this is? You see that the line is flat, and the reason is because it measures the higher high and the lower lows of the previous 26 period. If you put 52 period, if you double the values, you will see that the indicator will become much wider. I will show you what I mean by that. By standard, it's 9, 26, and 52. We will use exactly the double values. And immediately, you're going to see something very different and much more convenient. That's why I told you, you need to be creative with an indicator. The reason that I did this adjustment, I have already explained to you, is that I see a downtrend. I will tell you later, because I entered this trade and I lost it because it got my stop losses. I will go later to show you the trade. It was a lost trade, even though I went short on GBP. I predict the market. Again, I lost the trade. That's why I told you that's why trading can become hard at this part. Let's go back to the basics. Change the value again and see, give the explanations that will help you. Now we have explained these two major lines, our major moving averages. Now we have the third line and the fourth line. You can see here the green one that crosses and the purple one. These lines creates something like a cloud. And here it's come the best part from this indicator. You see that the prices goes also into the future. The green line, which is the top cloud line, I use up to remember like a Senkun span A, like up. That's how it's got in my mind to remember it. You don't have to. You will understand visually, and this is the beauty of this indicator. When the prices hits the purple line, which is the Senkun span, the bottom cloud line, this is basically like a moving support and resistance level in our trading. The thicker the cloud, the hardest the price to penetrate from this point. And what is the explanation behind? I mean, why is that? When a price moves in one direction very fast, most likely this is a weak point. Most likely it creates these thin places here. At this point, we have the potential that the prices will break the cloud, because it's much thinner. When the cloud becomes thicker, like in this case, it means that the prices is harder to penetrate the cloud. The idea is to follow these two basic lines, and for example, you see that when the prices penetrates the cloud from the downside, this is a very thick cloud, it is a time to proceed in a sell signal. They pass both of our lines at this point. Check the problem and check the opposite. And in this case, the prices also penetrated the cloud, but it was not by signal. You need to pay attention in what we've said in all of our tutorials. You see that the market is going down. There is no reason to get an opposite trade unless it's in your strategy to trade the reversals or the pullbacks, either if it's an Elliott wave and you are expecting a correction. Yes, you can use that. To those that are already trading, know exactly what is this indicator. But for people who are start trading, it is not the same. They need to know exactly what is happening and what's the explanation behind it. So these two lines that creates the cloud, the green one and the purple one, acts like a movable support and resistances. The way that it is calculated, it's by subtracting these two moving averages, the Tenkan-sen and the Kijun-sen. We are mentioning for the green line. So when the prices becomes green, I have changed the colors of the indicator. It means that the differences from these two indicators become positive. So most likely the prices will go higher. Now the bottom cloud line, the second span, the B1, it's the highest highs plus the lowest lows divided by 2. We have seen that, and now we have the period of 52. That's why you see this indicator is much more flat. It gives you a much more wider visually representation of some support and a resistance level. You see that, let's say that if you are in a downtrend, okay, we are checking for a short position. Unfortunately, it's a market that has already done the move, and you will see the problem with this indicator. For example, at this point, most likely you would lose the trade because candle penetrate, the prices penetrate. Of course, a smart person that has already seen our videos will say it's okay, I will wait for the confirmation, I will wait to the prices to stay above. Here you see that it happened exactly what this smart person thought in my mind. The line here becomes thinner. So most likely the prices will penetrate. Why it became thinner? Because it reacts into a fast change in the prices. The prices change significantly fast to the downside. So the indicator is not so fast at making the prediction. But check how this line can predict the future. Now, in this part, they are projecting forward the time. So what we should expect from the market? We will exclude the Tenkan-sen and the Kijun-sen because they are not here. And now here is the point that most likely we will wait the prices to reverse at this point because it's the thinner point of our cloud, and it's much more easy for the prices to penetrate. I leave behind one last line, which is this one. I will open the indicator again because if you can check it here, it's with a blue electric. It's the Chinkun span. I didn't name this line Why I did that? This line projects back 26 days. So this price, the lowest point that you can see here from our line, from our Chiku span, is exactly this price. Why this helps us? It's very simple. The market tends to repeat itself. So you are taking in consideration, that's what I said. I have said that also many times, that we are trading psychology and not prices. And this is the first thing that you need to understand. It's chaotic. It's not so easy to predict. That's why so many people are losing. Of course, there are some other skills that you need to have, or you need to trade with discipline. So this line, the Chiku span, shows the future. How? At this point, we have the closing prices that is here. So when this line penetrates the previous prices, like it did here, this means that probably the prices will keep going down. Why is that? At this point, the prices were here. Now, this is a lagging indicator, and it goes into the back in time. But how this will help us? If the prices start making a trajectory, I mean, of course, we don't know what. Maybe they will jump a bit because they will respect the previous low. You will see that this indicator, for example, if the next candle goes up, this indicator will also goes up. So this candle, which didn't happen yet, can give us the prediction by using the previous prices. We are safe to go on a short position because this line penetrates the previous prices. And why it penetrates the previous prices? This is very simple. When someone is willing to take a trade in the market, of course, we are just retail traders. I mean, we do not use so much. We are not investment banks. We are not organizations or institutions. We are not the big boys. We psychologically tend to go short when the prices at the previous point went short, and go long when the prices at the previous price went up. Of course, there are many other factors. This is an oversimplification. What is the negative of this indicator? There are a lot. You need to be creative every time you are making a trade. That you, of course, in the beginning, when you will start making your own technique, it will be hard. I can guarantee that it won't be very easy. But let's say that we are on a short. We want to enter on a short position. At some point, because we are still short, I will go and project the future by using this indicator. I see that the lines pass at this point, so I'm ready to go short. I am willing to go short. I mean, there is no reason to go long unless there is a previous structure which can hold me, and there is. But I don't want to mess you up. At this point, I zoom a bit. Let's see how we can go that into the future. These are some possible prices. When the prices hit at this point, at this mark here, most likely it's a short signal, but the prices might go higher. Now, our fellow trader knows what this indicator will do, but also knows that there was a rejection at this point. So what he will do? He will get ready to take a short position at this point. By default, prices will pass above both of these two lines, because we also need that. I mean, we need the prices to move above the moving average or the prices to move below. We want to go short, but when we will go short, when we will have a pullback. This also happened in the past. We have here the pullback. Now, what is the problem at this point? And this is also the problem with the indicator, that you couldn't go short at this point, even though it was looked like the ideal trade. You see that the prices penetrate the cloud. Very easy. So here you are ready to entering a short position. Remember, at this point, you won't have this line, the Chinku span. Ignore this line because it is a projection of the past. This is a lagging prices, so you don't have to take it into consideration yet into this example. So if you choose to go long at this point, short, you would have lost the trade because the prices penetrate the cloud again. See how thick it is. These are movable support and resistances, so the prices might bounce here. And then here is the point that our trader waits that the prices will return, and that's why initially he got a trade here, because he also saw that there is a very thin cloud and it was ready to go short. But look what the market did again. It went up and eventually went down. So this is a losing trade. You need to see also the structure of the market. I know it's not easy. There is no indicator that can predict everything for sure. And this is the problem when we are checking indicators. And of course, when you are changing time frames, it will be a hindsight. Trust me on that. The down becomes up and you have no idea from where to start and where to finish. It's good to stick with one time frame. I mean, stick with a time frame that you check the phenomenon. You check the down if you can recognize it optically. Of course, I'm not suggesting you how to trade. There is no some secret formula or some indicator that crosses some other indicator. I can say that like 1,000,000 times. There is no philosopher's stone. There is no holy grail in trading. You need to pay attention of every single information that there is out there. Also, check how messy the diagram become in the 30 minutes. Most likely, most people use it on the daily chart. Statistically, in most of the analysis, you're going to use it on the daily or on the 4 hours. It will work in every time frame under conditions. And see now what I told you about this line, that it's a lagging line of the future because the prices still remains above. So we are still good to proceed with our down trend. But this is something that no one can guarantee the success. Even though there are some automated systems that use Ichimoku, they are not very successful. The reason is that nothing can beat the human intuition in making a proper trade. I mean, to be able to predict the prices, and nothing, at least in my opinion, can beat humans. Now, I told you that I took a trade on GPP and I've lost it. I will log into my account. This is the standard account that we're gonna use for the entire series. Unfortunately, I still have the swaps and they are messing around with my account. But this was I don't have to see the trade, I do it for you. I remember exactly the prices. Now I used my stop at this point, imagining I'm still good to proceed with the downside. I average my position, but see what happened. The prices penetrate and still remaining on the upside. And of course, this is also the psychological part. I mean, I was not willing to lose more. Okay, this is a small account. I traded for the purposes of this series and so on. It's okay, but we need to show you that we are disciplined traders. And this is the reason that I am trading with a real account and I'm not messing with any demos. Of course, I will open a demo account to make my tests and so on. This won't stop. I won't stop making tests, or if you want to send me something to check. We will also check some experimental indicators. They are not very common, but in this channel, most likely you will see everything. I hope it was not so big. Again, thank you very, very much for your support. I hope I'll see you in the future, and trade safe.